Hello, it's Brian Shannon from AlphaTrends.net. Today is Tuesday, the 3rd of February, 2009, and we had another very interesting session here today. The NASDAQ did finish with a gain of 46 cents, or 1.5%. You can see we're still in this real more, narrow sideways range here. I guess, the bulk of the range that we've seen recently, actually the majority of the range has been more about like this, from about 28.5 up to about 31. We of course did have this year high right here that was made on the third day of the trading year, and recent lows in here, but we're pretty much stuck in a range within a primary downtrend, so there's still a lot of reason to be concerned about this market. On the shorter term time frames though, we had like I said, an interesting session. The 2960 level has been a very important level, as you know. We've been looking at that. It's back in here is where it's really started becoming a more important level for this market. It came down, found support, resistance just in here. And this morning we had a run out, the market run right up to that level, and we saw some initial selling that was actually pretty severe, but we made a higher low. Market came right up to the conjunction of that level at 2960 and the 5-day moving average. It did pull back, but not as shallow, and I mean a little bit more shallow. We did see a dry up in volume. That's more based on middle of the day patterns too. But we do have these higher lows. The market came up and then pushed through it here late in the day. So if we take a look, for instance, at a 1 minute time frame, you can see that initial sell-off was quick and severe. We made the higher low, held above the VWAP for the day, so the buyers did defend the average price here during the middle of the day, and then we saw some heavier volume in here, and that's where we saw the push past that 2960. 2960 did hold on these pullbacks, and we had a little bit further continuation of upside in here. Nothing to get excited about again, but over the next couple days, what we'll want to see is that the 5-day moving average in this 2960 level do continue to hold as support for the market. It's encouraging. I'll point out again, the average price that the NASDAQ 100 has traded at this year. And let me go to the go back to that 30-minute time frame. Since the beginning of the year, which began right there, the average price, and that's that line that's moving, is now at about $29.50. So the buyers have control for the year based on the average price. The market is, of course, still lower on the year, and what we'll want to see is will breaking this trend line be important. Not to suggest there's anything saying we're about to do that, but that might be where maybe we'll get a pullback and then a test of that trend line up in there. We do have these higher lows. Those will be important as well if 2950 is broken and holds below. So I think 2950, 2960, that's what we want to see holding. Yesterday I pointed out the possibility of an inverted head and shoulders pattern here with 26 as the neckline. Well, the height of this pattern, if we just take that, we'll grab that line and add it to the breakout point. That will give us an upward objective right up there at about $30 and let me just see what that level is, $30.40. So that $30.40 level looks like that's also about where we would meet this downtrend line, so adding a little bit further significance to that level as well. The daily time frame again is more neutral than anything. It remains a very volatile market, and if you're following along on the 1 and 2 minute time frames, you can make sense of it though, and there are trades that reveal themselves, but you have to be very quick to get in and out in order to make money and hold on to it. I'm going to bring up oil here only because it's still broken, obviously, but it's kind of the volume's kind of dried up. We've come close to testing the low from the intraday low from last year, and on the 30-minute time frame, we've got it kind of holding up in here. I think it's still very high risk. I wouldn't trade this, but maybe if it gets above 29 or so, holds above that 5-day moving average, then maybe we see a rally. It's still high risk. I think you're probably better off staying away from it. But based on the emails that I get, a lot of people do like to trade this, so that's the only way that I would possibly consider trading oil. The Russell 2000 was up 0.71% cent today with its 32-cent gain. We've got a little, trend line here, and then this trend line, you could call this a tightening triangle. I try not to pay too much attention to these formations, but we've got these moving averages crossing back and forth, showing us a lot of indecision. We've got the bigger level of support down here, just under $43 a share. Breaking that would be, fatal, I think, to this market, meaning that we would go down and test the lows that we saw intraday from last year, and that would be, down towards these, under 40 basically. The 10-minute time frame, we do also have higher lows in here and a higher high. The market came right up to that 5-day moving average. I had posted on Twitter that, be aware that, the S&P was up there as well, and a lot of times that's where you find some resistance for this market. The bigger level, of course, is that $46 level until it can get above and hold above there. And even, here we got above, and then the first pullback failed. So what we want to do is we want to see a rally beyond 46, a pullback, a successful test, and then a continuation. So, above $46 a share, our next potential level of resistance is this 47.5. That's obviously been pretty important. And, of course, we've got this downtrend line, which is right around 46.5. So, we're in a bear market. You can always find upside trades, if you're looking at the shorter term time frames. And in here, same thing, choppy session most of the day. Later on in the afternoon, we had seen a nice increase in volume, pullback, and then basically we saw, lower high and lower low in here though. So you got to be very quick in here. The market is, giving us a little bit of reason to become a little bit more optimistic on the intermediate or the shorter term time frames. But when you look at anything, like the daily time frame, it's still a mess. It's still high risk. The weekly time frame in particular, it still seems to me like at some point it ought to go back down and test near these lows. So you just cannot trust these moves for very long. Don't be overly encouraged by these rallies, the big percentage moves and that sort of thing. How many times have we seen, rallies of 10% or greater? I pointed out last year we'd seen 10 of those, and obviously the market finished much lower on the year. Let's take a look at the semiconductors because they have been strong, and they're not quite up to what I've been calling the more important level in here, which is about $17.70. The daily time frame you can see is just a choppy mess back and forth. You can't trade based off of what you're seeing on a daily time frame because you'll go nuts. You have to look at the intraday time frames, but before you do that, because this is such a mess, you have to take a look back and say what's under what context are we finding this mess. And it's still obviously, just to remind, as if you would have forgotten, that we are in a primary downtrend, and it's still possible we may go down and hit the test those levels at 15 or so. The 30-minute time frame, like I said yesterday, $17.60 to $17.70. That's where the range where we found sellers before. So it really needs to clear $17.70 and hold above that until we can think maybe it's going to last for more than a day on the upside. Short term, we do have these higher lows. I think breaking any one of these is going to be reason for a short term concern. So $17.20 we want to see hold tomorrow, and then the $17 level, because it's a round number and we've seen a lot of activity there prior, that will continue to be important. This gap will also be an area of significance. So if we get up to $17.70, the next potential level is 20 cents away. So there's all these potential levels of resistance. We've also got this trend line up near about $18 a share if we put that based on the daily time frame, and then off of these lows from this move, we can see that the range is tightening, and we get closer to maybe a break of a bigger move, but still got to just stay focused on the short-term time frames if you want to make money and hold on to it. The S&P 500 was up also. It was up $1.16 or 1.4%. This market, I think, is really the weaker market. It keeps testing this little trend line here, Maybe we're going to rally up and then fail and break down through it. That's a possibility you have to be aware of as well. The volume has diminished the last couple of days, so the buyers aren't rushing into this market. The weekly time frame obviously still a mess like all the other markets. Looking at a 30-minute time frame, the bigger level, the more important level remains 86, 86 to 86.20 or so in there. And we've got a declining 5-day moving average in this market. You can see we came right up to that 5-day moving average intraday, right towards the end of the day, and did find some selling. Let's look at that on the 5-minute time frame. It got a couple pennies above it, but this 5-day moving average is declining. That was at 84.25. That's where it said, be aware that it's there, and it backed off 50 cents from that level. So these potential levels are an area not to necessarily sell short, because it also went up 11 cents, 12 cents from there. But how you trade these is up to you. Just don't remember that in this short-term environment with this, this prior level and this, 5-day moving average, we need to see that 5-day moving average come down, flatten out. We need to see, let's say this is where we are right now, right here. We need to see the market hold above that and then begin to rally, and then maybe, so this is the 5-day moving average below it, then maybe run up for a test of 86. But that $86 level has been very important, for a while here. So there's no reason to think that it's going to be easily breached on the next test, next time it gets up there. Average price for the year, right there, basically at 86. You can see this moving average, this line right here that I'm drawing. This is automatically calculating the average price that this market has traded at since the beginning of the year, which is where I started the line. And you can see it ties in right here with this $86 level, adding further significance to that area.